Welcome back to the podcast, Heal Without Harm. My name is Dr. Clayton Dir, physical therapist and the one bringing you the truth about the medical system. I know as I started going through the medical system as a patient or a client or a customer or whatever you would call it, things got complicated quick. And thankfully, I had a gentleman named Drew on my side from the get-go, because every time I got confused or like, what the heck do I do next? I was simply just able to call him and he was able to either handle it for me or answer my questions or guide me to the next step. And I want to bring that to you because every time I talked to a friend who have went through a similar scenario, I tell them about Drew and ultimately send my friend to him or to his insurance group. His name is Drew Walters. He is from the ICT Insurance Group, and he's going to be on the podcast today answering as many questions as I can possibly get out of him to make things easier for you as you start to become a user of the medical system and your future. Drew, welcome to the podcast.
Thank you, Clayton. Happy to be here.
I'm happy that you're here so much. I've been wanting to have you on pretty much this whole year, so I'm glad that we finally got something nailed down. I think I just want to start with like what got you into insurance. We'll get a little bit of background on you, and then it's going to be essentially rapid fire in a way of like all these questions that I know people have, but they don't even know who to ask ultimately.
Yeah.
And so what got you into the insurance world?
Yeah. My cousin, he had been in the insurance world since 2003, dealing with health insurance. And after I was graduated from K-State, I had bartended while I was up there and then was managing the bar. Knew that I didn't want to be in the restaurant business, but trying to figure out what I wanted to do. And I had visited with him and he said, well, why don't you try out health insurance for a little bit? Come ride around with me. I can kind of teach you some stuff. So I credit him a lot of getting me involved into it because it has been something that's been really rewarding. And actually now I get to return the favor to him and help him out with a lot of stuff, even though he's been in it since 2003.
That's cool. And so I've always been curious when it comes to insurance, what is your educational background? It's not that I need a bachelor's degree, but like, how do you learn about this stuff? And then how do you become where you are now?
Yeah. So I graduated from K-State. It wasn't anything with an insurance degree or anything. I was actually a criminology major. Didn't really want to go into law enforcement. The nice thing about the industry is it does open it up to a lot of different walks of life. The main thing to be successful in the industry is caring about the people that we're trying to help. You really have to have an educator's heart when it comes to this stuff because it is so confusing and can be overwhelming for so many people that the ones that do the best in it are the ones that are truly trying to educate people about what their different options are. So those are the ones that have the most success with it.
That makes sense because I know when my wife and I came in, I just graduated from PT school and Courtney, my boss, said, hey, go get with Drew and learn about insurance. We'll give you some money ultimately to pay for the insurance, but go figure out what plan works best for you. And I think most people ultimately picture Blue Cross Blue Shield, United Healthcare, Aetna, Cigna, something like that. Yep. And they're usually just handed a packet, say, here's what it costs for insurance by their employer. Here's what it costs for your insurance. Here's what we cover. Well, in a small business, whether you're an entrepreneur listening or whether you're running a small business or you're an employee of a small business, those plans look much different. It's not just laid out for you and it's like pay here, sign here. And so when I came to you, I didn't even know what to ask. Like I knew so little, I didn't know what I didn't know. And so I think when I first came in, you provided such clarity of like, here's what the Affordable Care Act did. Here's what these costs are going to look like. Here's what major medical is going to look like. You rattled off some other things that we'll get to. But it was so clear where to me, it was obvious like what I should probably pick for my age, health, and everything. Yeah. But you were like, here's some options, here's the pros and cons. And then I would just ask a bunch of questions and you answered them from there. And so that's why for me, I recommend as many people as possible to just get a health insurance agent. And that's where it leads me to what they usually ask right after I say that, and is, do you cost money to use? Like if I wanted to come and use you, do I pay you money or how does that work?
Yeah, we don't charge any fees to any of our clients. We're obviously compensated. We're paid by the insurance companies, but we're an independent agency. So we don't work for one particular carrier. Our job or our role is to look at each person's individual situation and try and help them navigate to the plan or the carrier that's going to best fit their needs and their budget. But no, we don't charge any fees, consultation fees or otherwise to any of our clients. We're there for all of their reviews year over year to keep them informed of changes with the marketplace. One of the things I've always enjoyed about the individual side or the small business side, large group plans are great for the businesses and stuff that can afford them, but there's less of the personalization out of it. When I'm looking at a large group plan, I'm looking at a couple of different carriers, and then maybe those doctors are in network for that particular employee, but maybe some of the employees aren't going to have their doctors in network, or one of their medications isn't going to be on a formulary. Where on the individual side, if I can look at it by a per individual basis, I can look at employee A, employee B, and try and figure out which plan or which carrier is going to best fit their particular needs. So that's been my biggest enjoyment of it.
And if I was at Textron or Coke or something like that, which is going to have a major plan like that, like a group plan, can I still come use you and have you like look it over and help me make decisions?
Yeah, of course. We can help out with employees at larger companies, especially those where it might be very expensive to add the dependents and the spouse. It's usually very affordable to add the employee to the group plan. Oftentimes where the increased cost comes from is adding the dependents and the spouse. So what we try and look at with that is, again, breaking it down based off that individual. Does it make more sense for the employee to be on that group plan because so much of it's being covered by the employer? And then we take off the dependents and the spouse, put them onto a separate policy that's usually a lot more cost effective for those people.
So let's go into that, because that's what you helped us with at one point in time, where my wife used to work. It was going to be like $80 a month for her, $500 for me, and $1,000 for me and my kids.
Yep.
And it was like, yeah, we're not doing that, especially because we don't now. Our kids use the medical system much more, right, out the gate with different doctor's visits throughout the first couple of years of life, sicknesses all the time, and so we knew we couldn't just go with like the cheapest plan possible that covers little, because we're going to be going to the doctor 5 to 10 times throughout the year. And so we ended up go ahead and putting them on the major medical plan, but we considered doing like a health share or a meta share type thing. And so if you don't mind, just break down for us the classic Blue Cross Blue Shield. What is that type of thing called? And then what other plans exist? Like health sharing, I think you said ministry based stuff. I've also heard crowd sharing, those kinds of things. What are some of those categories, and how do we use them if needed?
Yeah, of course. We break things down really into 3 different buckets. So you've got your traditional major medical health insurance. That's carriers like Blue Cross Blue Shield, United Healthcare, Aetna, Ambetter, Cigna, the well-known ones that people have heard of. That's really classified in the Affordable Care Act or marketplace space. Everything since 2010, when the Affordable Care Act law first was written, all of those major medical health insurance carriers are classified as ACA compliant or Affordable Care Act compliant plans. So those are the ones that they're covering pre-existing conditions immediately. There's no annual or lifetime limits on claims. Your pretty traditional health insurance policies. Outside of that, there are short-term medical policies. These were originally designed as a bridge between someone going from employer A that they had their insurance through to employer B, and maybe they had a 3-month break before they could get onto the new employer's plan. Short-term medical plans were designed to kind of fill in that gap. As everything with health insurance, it's constantly evolving or changing. So in 2018, 2019, the first Trump administration actually changed where short-term medical plans could be done for, in some states, 1 year, other states 2 years, and some states even up to 3 years.
So you could actually extend whatever that. So, and that would that renew at the exact same like rate? Like you would have the same rate for that whole
you could
time
choose
period?
That. Yeah, you could lock in your rate essentially for the time period. That turned it a lot more into a kind of a kick the can down the road type of an option. 2 years really isn't a short-term plan because a lot can change with health insurance in the span of 2 years. So that was more of a, hey, this is a catastrophic type option to kick the can down the road, see what changes with health insurance, and then we can adjust when we need to. They're not the right fit for everyone. Short-term medical plans, for instance, don't cover maternity. They don't cover pre-existing conditions. So these are things that are important for the consumer to be aware of. And what our job is, that educational piece of not just putting someone into a plan, but does that plan fit this person's needs? So kind of doing more of a deep dive into their particular situation.
Because sometimes, sorry to interrupt you, but sometimes on those, they may get it and they're like, I have health insurance. And then something happens and then they're quite flustered probably that it doesn't cover what they thought it did.
Exactly.
And then they're in pretty deep type of thing. So I see what you're saying there.
And it's always different of what a consumer is going to think of as a pre-existing condition versus what an insurance company is going to think of.
Yeah, it goes down to the definition on paper.
Exactly. And you can have someone that says they don't have any pre-existing conditions, but, they've been seeing a back specialist for 2 years, and then 3 months into the short-term medical plan, they need to have a back surgery. Well, that's in their medical records that they've been receiving advice or treatment for their back.
Gotcha.
So, just doing a real deep dive of what are you currently using health insurance for, and figuring out if this is a good fit. Same thing with healthcare sharing ministries. Those technically aren't health insurance. Same with crowd sharing. They're not an insurance product. Many healthcare sharing ministries are nonprofit entities, usually with some form of a religious backing. But they can be an excellent fit for a lot of people, a lot more affordable than your traditional full-priced health insurance plan. Still with the same thing of there's some cons with them where they might have a waiting period on pre-existing conditions. You might need to be on the plan for 2 years before a pre-existing condition is going to be covered. Now, is that pre-existing condition something that is a routine thing that's maintained versus a congestive heart failure where there's going to be potential heart surgeries? Those are the things where we're going to advise someone of, if you're falling into that situation where it's a pre-existing condition that might require some major services in the upcoming months, then a healthcare sharing plan or a short-term medical policy might not be the right fit for them. But that's where the ACA still having that as a option where it does cover pre-existing conditions. So just helping people navigate it's the key.
I think what first comes to mind on these things is everybody's so used to the employer providing the benefits that it feels sketchy.
Yes.
Right. It feels odd, like this short-term medical that I've never heard of. Like, are you just selling me this weird product? Like, what does this actually cover? And I'm not gonna lie, that still feels odd to me, just because I think we're all used to or told what's right. I don't know what the thing is, but all of these felt weird. And I was even on, I think I was on MediShare at one point in time with you. A friend of mine was on OneShare, which I think was a little bit more religious backed, if I remember correctly, or maybe I have those backwards. Yeah. Okay. And so I know he really liked those, but what would you say to that person who those may be the right fit for him, but it feels odd because it's not Blue Cross or Cigna or United. It's not one of those bigger ones.
Yeah.
Is it still insurance? Does it matter if it's not insurance? How do you settle those nerves kind of in that?
Yeah.
With that person?
Well, it's not insurance, so it doesn't have to abide by the same laws of insurance. That's how it doesn't work with the pre-existing conditions. It's not regulated by the Department of Insurance. But when I'm talking to someone about settling the nerves of different options, if that is something that's a good fit, one of the things that I try and have people look at is, how did the claims process work? So many healthcare sharing ministries work off of a reimbursement basis. Other ones pay the provider directly. That's a big piece of it when trying to navigate which one fits right. Same with crowdsourcing, things like that. Because as you know, with like medical bills, we're getting them from all different areas, whether it's the hospital sent us in a bill or the surgeon sent us a bill, or we've got an oncologist, a radiologist. And if you're on one that is more of a reimbursement, you're managing all of those claims that are coming in and then needing to submit them in for reimbursement. So now you're a claims processor as well as going through some of those medical scenarios that aren't fun to be dealing with.
Yeah, especially at large. Because if you go through one major expense, one major incident, you may be having 9 people or 9 bills coming in that you're having to turn around and send back out after you've paid and asking for reimbursement.
Right. So where if you're working with ones that are more paying the provider directly, those claims are being handled on the back end, and you're needing to be less involved in actually submitting in the claims for reimbursement. They're being paid directly by the provider's being paid directly by the sharing ministry.
If you had to speak vaguely, if we put these back in those buckets, like you said, Affordable Care Act type plan, and this is if someone went to get it on their own, not through their employer.
Yep.
You have the Affordable Care Act one, so Blue Cross Blue Shield, United, and all those. You have short-term medical, and then you have some sort of sharing, or what did you call it?
Healthcare sharing.
Healthcare sharing. Okay.
Yeah.
You have that one. In general, if you had to like take a group of people very broadly, who fits in each one of those? Like who should generally gravitate towards each one of those?
Yeah. You're, with so much with health insurance right now, it is, a lot of it depends on income. So with the Affordable Care Act, for instance, there are tax credits available to help people lower their costs for bucket A, the Affordable Care Act plans. If they're in a situation where they're getting a large tax credit, sometimes it's getting their premium down to $0 a month, or in some demographics, it's even lowering their deductibles and their out-of-pocket maximums. That's the right bucket for them to go in, because it's the safest of it's your traditional major medical health insurance. And if it's also then the most affordable, then that's the right bucket for the demographics that would be receiving tax credits to lower the premium to go into. Your short-term medical plans really fit well with younger people. Maybe they're 26 coming off of their parents' group insurance plan. They're healthy. They've been working a job and making a good amount of money, and they just don't use insurance that often, where what their goal is less of the maintenance care and more of, I'm trying to protect myself if something big were to happen. If I get into an accident, if God forbid some major illness were to happen, we're trying to protect against that major thing. I'm less worried about the routine doctor's visits.
Yeah, I'll pay $180 for my yearly annual instead of $20 copay.
Exactly.
Kind of thing. Because I know with me, I've never paid more than $105 per month.
Yep.
But that's also, but I also like rarely go to the doctor. And if I do, I pay out of pocket.
Right.
And so if I think about how much I would have paid for an Affordable Care Act thing, let's say it was $400 a month.
Yeah, easily.
Okay, well, I've saved $300 a month times 12 for the year. I'm now saved $3,600.
Yeah.
And so any medical expense I have under $3,600, I'm coming out positive. And thankfully for 5 years straight, I've came out very, very, very positive.
Right.
And so then if I were to get in an accident, let's say I just drive my car and get in a wreck.
Yeah.
I know generally car insurance will pay some, but then let's say the rest goes to my health insurance. I don't know if you can remember my plan off the top of your head, but with what I have, what would that look like? Let's say I go to the hospital. Let's say I have a couple fractures, have to get 3 surgeries. What does the health insurance aspect look like that? Yeah, on the short-term medical plan.
So on a short-term medical plan, and yours in particular, because you can range them by deductibles and stuff, but you can have a $5,000 deductible. You can then have an option of, do you want co-insurance after that? Or do you want the insurance company to take over at 100%?
I can decide that when I'm setting up
when
the
you're
short-term
setting
medical.
up the short-term medical plan, yeah.
Which will change my premium, correct?
Correct, yeah.
Okay.
But for the majority of people, they have a $5,000 deductible, and then the insurance company takes over at 100%.
Okay.
So in that example, and let's say the car insurance wasn't involved with it, but you had a major accident, you're out hiking, you're an active guy and you're out hiking, your responsibility would be the $5,000 deductible, and then the insurance company would take over that for any of the medical conditions that were deemed medically necessary and approved.
Real quick, still on that, because I want to expand, because I think people say what you're saying, and then it's like, okay, but how does that actually play out? So let's say I go to the hospital, I get all these bills coming in, I pay up to the first $5,000. Does that matter if they're in network or out of network, those providers, on a short-term?
On a short-term medical plan, most use a PPO network. So there is in-network, out-of-network coverage. Now, if the providers are out of network, then you do have a separate out-of-pocket maximum for out-of-network medical bills. But the $5,000 would apply for any in-network medical bills.
Okay, so if, let's say I was seen by 3 people, 2 of them in network, 1 of them out, those may be different buckets essentially that I'm filling with costs. So I may still have to spend more, but eventually insurance would like pick up the rest kind of thing. Okay, so there's that. And then one thing I want to stack on top of this, because one of the things you helped us with most was adding additional supplemental plans, which I think nobody knows about unless they know someone like you, because they're just like, I have health insurance, done. They check the box, they pay the pay, and they go on.
Yeah.
And you created a supplemental plan or found one and helped us get it. Then we added a pregnancy rider. And then I think even now you have me on a short-term medical plan, but you had a second one that was like an accident one.
Correct.
And so I just want to expand upon some of these other things that you can bolt on that makes me sleep better at night, makes me not really have to worry about if I did rupture my ACL, like I have a thing for that, and still paying low cost. I think I'm all in somewhere between $90 and $100 a month. And so if you don't mind, let's start with that supplemental plan that had to do with like hospitalizations and surgeries and how we utilized it personally, my wife and I.
Yeah, of course. So hospital indemnity plans are supplemental policies that are designed to be attached or be combined with another insurance plan. So whether that's you're adding on to go with your group insurance plan, or you're doing a healthcare sharing ministry or a short-term medical or an ACA plan, those are supplemental plans to help cover up the still out of pocket or still exposure that you've got with your main health insurance policy. The plan for you guys, as an example, we added in a pregnancy rider. So the way that policy works is per day that you're hospitalized for the first 5 days of a calendar year, your plan's set to pay out $4,000 per day. And then it drops down to $2,000 per day for the next 25 days of a calendar year. That could pay out because you're hospitalized due to a pregnancy, or you're hospitalized for another reason. Maybe it's you are in an accident and they keep you overnight in the hospital. Well, that's a payout that the indemnity policy would have. They also have surgical riders as well that are added into them, to where maybe you're not hospitalized, but maybe you go in for a skin biopsy. Well, oftentimes, even if that's in a physician's office, oftentimes it's coded as a surgery. So there's a line item on that where the hospital indemnity plan would have a benefit that would pay out, even if it's something as small as a skin tag being removed or a biopsy of a mole, or up to something more major like a heart valve replacement need to be done. So,
and this is not something that like has to be like an in-network kind of thing. The way I understood it, it was, hey, by the way, we did this. Here's proof that I was in the hospital. And they're like, okay. And they cut you a check for $4,000.
Yep. Correct.
Ultimately. And so I want to play this out for the listeners, because this was very helpful for me and my family. And it was all because you were proactive. And that was the other thing that made me happy, is when I came to you, my wife and I don't know if we were married yet. I think we were. I could go back and look. Yeah, we were married. And I was thinking, we were talking and you're like, do you guys plan on having kids at any point in time? We're like, I mean, yeah, like not yet, but yes. And you're like, okay, cool. Here's this thing. And so we paid approximately $100 a month, and we paid in for just over a year, maybe a year and a half before pregnancy set in. And we actually used this twice. First, like you said, there was a skin tag that needed to be removed. We thought nothing of it. We essentially, the supplemental that we're talking about wasn't even notified of it. And I remember reaching out to you and I said, I'm curious if this qualifies as surgery. And I don't remember the cost. Let's say it was a $200 cost to us, or at least that's what was billed. I sent it to you, and I want to say they paid for that plus an additional like 125%. There was an additional payment on it, and I was like, that was really cool, because then it helped with some other costs. But the way we strategically did it was the $4,000 per night plan. We were there for 2 nights, and so we were granted $8,000. The second pregnancy, though, there was something coded, whereas a surgery or something else, that they actually added in some extra money.
Yeah.
What that did for us, though, is it paid off all the hospital bill after her normal insurance. And now we have a decent, what we qualified it as like an HSA, not technically, but we just made a savings account. And so now all of that money is still sitting in an account, accruing interest, and essentially paying for medical bills nowadays. And so when you know how to use the health, well, I don't know how to use it. When you have someone that helps you essentially know how to use health insurance appropriately, things aren't as expensive, and when they are, you can use the system much better to help you out. And so that's why I wanted to go into this.
Yeah, of course.
The second thing I wanted to talk about on this is, am I currently on short-term medical, or am I on a catastrophic plan, or is
You're
that the same thing?
You're on short-term medical.
Okay.
Yeah.
I have 2 different policies, if I remember correctly, because you were like, hey, here's short-term medical, but if you think anything may get hurt or something like that, you may want to bolt this on. Can you tell me what that is?
Yeah. So, you're an active guy, and really for anyone, accidents are one of the most common medical claims that people have. That could be anything from hanging lights on your house and then coming down the ladder, missing the last couple rings and falling on your behind and herniating a disc. That's technically an accident, or you're out hiking. But an accident policy, yours in particular, you have a $250 deductible, and then it pays 100% of the medical expenses related to that accident up to $5,000. Well, your out-of-pocket maximum or your deductible on your short-term medical plan is $5,000. So one of two things would happen for you in an accident claim. Either it's a small accident and the amount's going to fall below the $5,000. You're still going to pay your $250 deductible from the accident plan. It'll take care of the remaining portion of that accident bill.
Mm-hmm.
Or the bills, it's a bigger one, and the bill's over $10,000. Well, now the accident plan is going to essentially take care of your deductible, and then your short-term medical plan is going to take care of everything above that $5,000.
So I paid $250 to the accident insurance people.
Right.
They pay everything up to $5,000, and then they're like, I'm out. But then that deductible is essentially paid by the true short-term medical they've taken over. And so you've pieced together two things to make it to where if I were to go tear my ACL skiing, I should be about out $250.
Correct.
Fantastic. This is great.
And
so go ahead.
I was going to say the alternative to that is the person isn't adding in that extra layer of protection of the supplemental policy. And let's say it's a small accident, but you go to the ER and the bill's $3,000. Well, they're out of pocket the $3,000, and they still haven't met their deductible.
Mm-hmm.
They've still got $2,000 left. So supplemental policies, your major medical, your short-term medical, your kind of base health insurance policy, that's the most important portion of it, because it's the one that's protecting against the bankruptcies and those large bills. But the supplemental policies are almost as important, just because with our where we sit right now with the Affordable Care Act plans and the average out-of-pocket maximums being $9,200 up to two people, so a family out-of-pocket maximum being over $18,000, that's typically not something that the majority of people just have sitting in their savings account.
Let alone they're draining their accounts, paying huge premiums just to still have to pay the first 18 grand.
Exactly. So building a policy with some of those supplemental policies kind of layered in, that's the educational piece. And thinking ahead, I'm thinking ahead of what might happen. And I'm doing that because the consumer oftentimes isn't.
Hey, it's Clayton. Quick mid-show favor. If this episode's got you nodding along or saying, that's interesting, do me a solid. Leave me a review or send it to that one friend who needs to hear it. You'll make my day and maybe save them from another bad doctor's visit. This episode of Heal Without Harm is brought to you by Compelled Fitness, your ultimate partner in Wichita for getting into the best shape of your life. Whether you're aiming for better health, reaching athletic goals, or simply improving your fitness, Compelled Fitness offers programs and services tailored to fit your needs. Don't settle for less than your best. Visit compelled-fitness.com today and start your transformation with expert guidance and personalized fitness. At Compelled Fitness, the goal is helping you become the best version of yourself. Thank you. Let's get back to the episode. 20, 30 years ago, we didn't have to, or at least that's how it felt. We didn't have to, because you show up at any medical facility, you hand them this magical insurance card and $20 copay and everything else is taken care of kind of thing. And I feel like slowly that's been stripped away. But the expectations haven't ultimately. And I think that's where there's a huge disconnect that I see every day as being the consumer, taking my daughters to the doctor's office, but also being the provider, because our physical therapy clinic doesn't even handle insurance because we're like, it's a racket. Like the way that we would have to run this business just to get essentially like our overhead taken care of is so cruel to the patient. It's unfair.
Right.
And so this is where before we started recording, I want to go ahead and roll into this, is managing those expectations. And you kind of compared car insurance to medical insurance. And at least nowadays, the very realistic aspect is, what should you expect from your health insurance? Because you talked about oil changes and kind of equating that to doctor's visits. How would you explain the two, and when the way we should really look at health insurance? I'll put it that way.
Yeah.
And when to use it.
I think there's, we just have such a, we think about things differently of health insurance and health care.
Mm-hmm.
I think there's a big difference between health care and health insurance. And right now, health insurance is so involved in health care, where if we can get to a system where health insurance is there for what all other forms of insurance are there for. Your auto insurance, we're not calling our auto insurance company asking, well, what's my copay for my oil change? Or what's my copay if I have to get new tires? What if I have tire erosion? I got to get new tires. I get a new wiper blades. What are my copays for those types of things? We have car insurance for the person's car that we hit and we can't afford to fix it. Health insurance is actually the exact opposite. What the majority of people think of when they think this is what health insurance is, it's there to pay for your routine doctor's visit. It's there to pay for my high blood pressure medication. That's the only purpose of insurance. And as expensive as insurance can be for some people, it's like, well, if that's the only reason for insurance, there's better systems than having insurance involved in your health care. What insurance or health insurance should be focused on of being there is for those medical bills that we can't pay, the surgeries, the hospital stays, the, God forbid, the cancer treatments or things like that, those $100,000 to $200,000 medical bills. That's the main focus of health insurance. I always explain when I'm explaining things to clients, I'll say, I'm going to go through kind of how your plan would work on the day-to-day stuff. How does it work for your medications, for x-rays, labs? How's it going to work when you go see a primary care doctor? I'm going to walk them through that process. But I'm also going to say, for me, this isn't my main concern. My main concern is, how does your plan going to work? How is it going to cover you in the worst case scenario when we have a major accident while we're out hiking, or we have to have an open heart surgery, we have to be in the hospital and ICU for 2 weeks? How does our plan work then? Because that's the main purpose of the insurance.
And that's when I wanted to run the smoothest.
Yes,
right?
exactly.
That's when I'm trying to just stay alive, or my family members trying to stay alive, the last concern I would want for anybody, and I think any of us would want for ourselves, is how much I'm gonna have to pay for this.
100%.
You know, because people come out and they're like, I'm alive, but I can't breathe underneath all the debt that I'm now in, type of thing. And so with that being said, I think a big shift on perspective needs to change. And I'm curious if you feel like this is the way it's going, where it's just like we need to start either using insurance less, expecting less of insurance, shifting towards, I'm going to pay for most of this out of pocket. And the big stuff, that's when I'll call in for insurance. Do you feel like that's the way it's slowly kind of getting pushed? And do you feel like that's the right way? Or what are your thoughts there?
I've always been a big advocate of the direct primary care model and system, like how they have all that set up. I recommend even clients that are on your traditional major medical plan with a carrier like Blue Cross Blue Shield, I'm still a big advocate for them having a direct primary care doctor. I think having the insurance less involved in that health care side of it is a smoother process for the consumer and for the provider. But
yeah, no, I would agree with you. And so this is the other piece that I wanted to rope into, and then we'll have to wrap up, and maybe we'll do this again, is when I went and had a surgical procedure done that was elective, and I handed them my insurance, which was the short-term medical or whatever. Thankfully, they were actually fairly proactive. They actually called me and they were like, hey, if we run it through the insurance company that you gave us, you're looking at $1,400. Our cash rate's $900, which everybody's probably shaking their head exactly. Why would I use my insurance? It actually costs more. And it comes down to contracted prices, right? And so thankfully they said, would you like to just not run it through insurance and pay out of pocket? I'm like, actually, yes, that'd be great. And so in general, if I have Blue Cross and a major plan, do I have to run it through insurance, or can I just elect, even though I'm an insurance holder, can I just pay out of pocket even if I have one of those major plans?
Yeah. A lot of times, the feedback that sometimes we've gotten from doctors' offices is as soon as they know that, hey, there's a you have insurance, they have to run it through the insurance. But I've had other scenarios where providers' offices have, we're going to work with you on a cash pay basis. And yeah, for those bills like that it's not going to reach your deductible. It's kind of like, I'll equate it back to another form of insurance, but homeowners insurance. If you're going to have to have a couple shingles replaced and it's not going to meet your deductible, then why are we running it through our insurance?
Especially if it's going to affect things down the road, right? Premiums and stuff.
Now, in health insurance, claims don't raise your rates for the health insurance. So, but
there was actually an example. I was wanting to stitch this social media post at some point in time, but I'd never got around to it. There's a guy, he said, hey, I essentially pay, I think probably for a short-term medical plan. And he said, because of that, my deductible being high, I'm wanting to get an MRI on my knee. Doctor said it might be a good idea. And I'm like, maybe you don't need it. Maybe you should go to PT. Regardless, he went through this really well. He said, I called 3 places. He said, place number 1, they usually, it's like a hospital-based thing. It was going to be $4,000 for this MRI.
Yeah.
He said, I called place number 2, it's $2,500. Called place number 3, they have cash pay rate. I'm paying $300. He's like, I was in and out in 40 minutes. This was fantastic. And it's like, not only did he pay, I don't know, 12%, 10%, and actually less than that, maybe 8% of what the hospital one was.
Yeah.
But talk about way less headache. He got in faster, got out faster, worked with maybe 2 people as opposed to like this whole like
drawn out system.
Yes. Like this whole like, all right, medical billing people and then over to this department and all that kind of stuff. And it's like, that's how it could be.
Yeah.
And thankfully, especially here in Wichita, it's like getting there. Like I remember 5 years ago, there's like 2 direct primary cares. Now there's like 10. And so it boils down to what I've heard is you can't fix a broken system sometimes, but if you can build a better system, it will pull money out of the broken one and people will start spending it with the one that works.
Correct.
And so I think if we can change people's expectations to go from insurance should pay for everything to insurance will pay for the big stuff.
Yes.
I will take on the cost, especially because I'm already going to, whether you want to or not. If you have a $3,000, $4,000, $5,000 deductible, guess what? A lot of it's coming out of your pocket. So you might as well spend it, right? With people who are going to help you. Let's cut out the noise. Let's take health insurance out of health care.
Correct.
Type of thing. And let the doctors and the patients make the decisions together. And so that's the way I see things going. And I want more people to know that when they show up for something, they can be like, hey, what's it going to cost if I don't run through insurance and I just pay you directly? Like person to person kind of thing. The very last piece that I want to finish on, if you don't mind, and then we'll wrap things up, is my daughter has been to the hospital a couple times for asthma. And I'm curious your thoughts or if there's any lingo that you would recommend. I had a smooth experience because I figured out how to do it. We got 2 bills in the mail. They added up to, let's say, $4,000.
Okay.
A lot of people would just pay it. If they have the money, they would just pay it. I knew that I could call and negotiate, and it sounded like they used terms like, okay, we can settle this type of thing. And so I called and I was like, hey, I'm willing to pay this right away and all in one. Is there any sort of discount you can get to settle this? And they were like, yeah, we could take $40 off, which I did the quick math and it was about 0.7% is what they were going to offer as a discount for paying in full. And I said, oh no, I was thinking like 50% off, which for all of you listening, that sounds really scary to ask. They deal with stuff all the time. Just ask for a huge discount. And this is where I'll consult with you, refer to you. And she came back and she ended up discounting it by 44%, which saved us about $1,800, reduced it significantly. I paid it and we were good to go.
Yeah.
So what's your experience with this and what would you tell someone that's potentially sitting across from a high bill? How would they navigate it?
I would say anytime you get a bill, double check it. A lot of times ask for an itemized receipt of that bill so you can see line item of what was billed because you'll tend to find errors. Maybe things have been double charged, things like that, but never take them just at face value. Call, try and negotiate on those medical bills because yes, if you can get even if you've ran it through insurance and you're still have to pay your deductible,
this
you're
was
out of
post
pocket,
insurance,
right? You can get a higher discount on those bills by just asking for it. You just have to take the time sometimes to call the provider's office, call the hospital, and ask for those.
This hospital phone call is 21 minutes, which I think was very well spent.
Yeah, I think that's a good ROI for your time.
For sure.
Yeah.
Okay, so definitely call and negotiate. Just time-wise, we got to finish up. And so I actually had this demanded or requested by followers. What would you say is your favorite junk food snack?
Favorite junk food snack? One of my coworkers really loves Reese's. So a lot of those are kept around the office. And that is something that I sneak a few times, or when they're out, I'm going to grab one of those. So that's my guilty pleasure, is taking one of those.
One of them I have not tried yet. They're just coming out. Do you follow Mr. Beast at all?
I do a little bit.
Okay.
Yeah.
He is like changing the game in regards to chocolate.
Yeah.
Do you have any idea of what I'm talking about?
I've seen some videos of his chocolate, but I haven't. Yeah.
So he essentially wanted to get in the chocolate game, and then found out that the majority of chocolate comes from farms where kids are involved and they're not being like paid appropriately. So there's a ton of child labor in chocolate. And when he brought this up to the big companies, they're like, "This is just the way it's done." And he's like, "No, that's not going to be how it's done." So he essentially has his own entire like chain from farm to like chocolate bar, Feastables. And he actually just came out with a peanut butter cup and a hazelnut cup. So like essentially like a Nutella, like a hazelnut one.
Right.
Haven't tried it yet. But I'm trying to start buying more of that. Again, supporting a better system.
Exactly.
He said it's a pretty dark industry once you get into...
Once you dive into it?
Yeah. Huh. There's not a whole lot of ethics in there. So
I'll just check that out.
Start diving into Feastables and see if you can convert your homie over to it ultimately. To finish off with though, I want to help more people either find you or find your company, because I know you've expanded quite a bit.
Yeah.
So you've got a lot of people here to help you and help people. And so how can people get in touch with you? I can put these links below, but how should they reach out to work with you?
You can give us a call. We'll link our phone number and our email address here in the podcast, but that's the quickest way, is to send a submission in either through our email or to give us a phone call. And then we'll have one of our advisors reach out to you. We tend to try and schedule an in-person meeting or a Zoom meeting with you. Don't think of that as, oh, we're trying to sell things. We're wanting to get together so that on a personal level, we can connect with what are your concerns? What are your needs? If we're just putting together quick quotes and sending them out to people, we're not doing the job of properly educating of how the system works and how you can have it work for you. So we always try and get together with our clients, like I said, either in person or via video chat, so that we can develop that relationship and best serve you correctly.
And I do have a lot of listeners that are not in the state of Kansas.
Yeah.
Can you serve and help anybody in the U.S.?
Yeah. There's very few states that we're not licensed in. Off the top of my head, Washington State might be one of them, but all throughout the Midwest, the southern states, a lot of the western states of the country, we can add a link to our map as well. But yes, we can help people nationwide. We've got our main office here in Wichita, Kansas. We also have an office in Overland Park up in Kansas City, and then we've got an office in Great Bend to help out west.
Perfect. Well, Drew, thank you for your time. If you guys need help with anything, you can reach out to me or Drew, and I'll get you guys linked up. Like you said, anybody nationwide, pretty much he can help out. Yeah. Hopefully today you learned a little bit more how to heal without harm, but specifically at a little bit cheaper rate. Drew, thanks for coming on.
Thank you, Clayton. Appreciate it.
You're welcome.